Jeff Booth, thank you for being here today.
No problem. Great to be here, Henry.
So my Bitcoin story. I bought Bitcoin in 2019, but I had no idea what it was. It was when Cash App let you buy it. They opened the ability to buy it, and I just happened to have that app,
Yeah.
and I was like, oh, I know this thing goes up and down and up and down. I'll buy like a little bit, and it'll be like a fun sports bet. I'll just watch this thing go up and down daily. That was my that was my foray into Bitcoin, and then I listened to Caitlin Long on a podcast in March of 2020. This is all the COVID stuff. Then you in April of 2020, and then I bought and read your book right after that, and that's when everything just started to like click with what this thing was, and that kind of sent me down the rabbit hole. So I really appreciate the book you wrote, The Price of Tomorrow, and kind of the impact it's made on how I view the world. So thank you for that, first off.
Really appreciate it. Thanks.
Technology is driving deflation sort of forever, and these two can't coexist. And you write that, and then like one of the biggest money printing events ever happens around the time your book came out. So when you were finishing writing, were you aware of the threat of COVID? I wanted to know like that overlap of time.
Yeah, no, wasn't aware
Mm-hmm.
specifically of the threat of COVID. Mind you, you did see kind of signs of this coming in October, before COVID really came out, and you saw signs of kind of framing of something like this even before that. But I wasn't specifically aware of COVID. I would say if you know the structural issue, you know that the system must co-opt your
Mm-hmm.
attention, and because it requires a massive liquidity, and or monetary or debasements of currencies all over the world, and continual debasements of currencies. So you know that can't happen without a reason to make it happen.
Mm-hmm.
And so whether it's global warming, COVID, war, there will be ever more reasons to make money printing happen. That most people will fall into the trap of believing that they have to consolidate the power to save people.
So what happened then? I think I was talking to my wife last night about just still trying to wrap your mind around how crazy the money got in COVID. I mean, it still is. We're still feeling it. But what happened in 2020 to 2022 with our monetary system? How would you explain what was going on?
Yeah, and actually, I think that's why. So when people are referencing 2020 or 2008 or what's about to
Mm-hmm.
happen, they're essentially looking at a frame of the movie, saying, "Oh my God, this is what happened," or
Mm-hmm.
1971, or any of these frames of the movie. When if you just zoom out and watch the movie and you know where the movie is going to end, all of these frames make perfect sense. So nothing happened in 2020 that didn't happen in 2015, that didn't happen in 2008, didn't happen in the 90s, didn't happen. All that happened is technologies moving faster one way, trying to provide deflation, trying to provide abundant world. And from the system you're measuring from, it requires exponentially more debasement of currency. So it's really important, so critically important to that people understand that, because if they understand this movie will play out like this, and all of the commentators that are talking about, because you could get a lot of views, you could get a ton of people from within the system saying, here's when it's going to break, here's
Mm-hmm.
when it's going to break, here's the next amount of liquidity is X, the dollar is going to fail tomorrow. It's fear porn, and you could get tons of views from just living in that system, talking about that system when it's going to break, because everybody's measuring from
Mm-hmm.
that system. Yeah, I'll just say it's inevitable that it keeps breaking. And also inevitable in that is most people stay trapped within it, because that's what you see what happens in
Mhm.
Argentina. That's what you see what happens in Turkey, in Egypt. Most people stay stuck in it, believing that there's a solve from within the system. So I would just say, if you zoom back just on a shorter time frame than I'm talking about, if you zoom back to
Mhm.
2008, remember the original TARP, Trouble Asset Relief Program, which really is just papering over, pretending assets are okay, and printing a bunch of money to make sure they're okay. It was, the original one was 350 billion. Remember the marches on Wall Street?
Yeah.
And then people went home, and then it turned into
Mhm.
700 billion, and the trend had to be exponentially more money printing by the time we got to 2020, and it has to be exponentially more money printing as we go forward. So the next stimulus, or the next amount of debasement, is going to make your face bleed. Like, you're just gonna, but then most people go, and they'll go home, and they'll stay stuck, and complain about the system, from the system that's robbing them. And this has been going on for forever, for a long, long time. It's just getting worse now, and so as it gets worse, people are starting to see it. But most people, even that once they see it, keep on reinforcing that same system.
An example of how crazy it got is if you take the dollar as worth a dollar through the COVID stuff, and then you look at houses, and I think I remember reading at some point like the average house in America was up 30 or 35%. There's not, in like
Right.
a year, there's not more people living here. There's not, like, we didn't get, we didn't double our population. Not every single person that didn't before wants to buy a house now. There's no like structurally more demand. It's just every single house went up by 35%, which the only answer is that what you're measuring it went down, and all the houses are worth the same, and the dollars are worth less, right? So,
That's exactly what's happened.
which brings us to like housing as a way to explain all of this stuff. Like, what has happened with housing? How are prices so high, yet interest rates are much higher than they were when that all went up? Like, what are you seeing in the housing market, in regards to our money and how the system functions?
So it's tethered to the existing system. It's, in fact, it's a critical component of the existing system. And you could say what housing really is. It's something that's short the dollar,
Mm.
right? Because you pay back your debt in cheaper dollars tomorrow, and the house holds its value better than those
Hmm.
dollars. That's so so. And the housing has done that for the last
Yeah.
100 years. It's the and now, as dollars are debasing faster, current houses are going up faster. That's happened. It's the same process. And so, as a result of that process, what ends up happening is housing is no longer a utility.
Hmm.
75 years ago, 100 years ago, it used to be a utility. We raised family. That's where we wanted. And housing obeyed economics terms, where prices would fall inside a utility. Obviously, scarce regions, prices went up a
Hmm.
little bit. But we have more technology in building supplies today. We have more technology in all of the different products, distribution, energy, everything that goes into a house. And a house in kind of 1913, 1915 through Sears cost $2,500 delivered, like a
Mm.
big house delivered. Now you had to assemble it, you had to put it together, but all of the materials, sinks,
Wow.
tubs, drywall, the all of the material, electrical, plumbing, lumber, roof, everything, $2,500. Um, could you deliver, even with all the technology advances today through the supply chain? You would expect that $2,500 would be way less today. There's no way you could deliver a house for anywhere
Right.
close. It'd be $300,000 for the same house
Mhm.
today, meaning your money has lost that much money in that many years, because and it's moved from being a utility to a store of
Mm-hmm.
value. So now it's created a monetary premium because you know your cash is unsafe in the bank, so you have to put your cash somewhere, and so you hold your cash in an asset that creates it's just a better store of money than money.
Yep.
So it creates a monetary premium for real estate, which is a part of the underlying system because it allows the debt to expand at an ever increasing rate. And if you allowed deflation from that system, from that credit based system, then all of those housing, all of the monetary premium and everything would collapse. And I would mean it would collapse so
Mm-hmm.
outrageously. Houses would be worth, if you actually really let it collapse in real terms today, houses might be worth $10,000 because it would be such a collapse, calamity. Nobody would be buying it because they wouldn't have the money to buy them because the money was
Mm-hmm.
built from a credit based system that eviscerates all of the money. It just completely collapses. In that world, all banks would
Yep.
fail, um, and so there would be no money as you reset. So in it and in what I just said, it kind of talks about the paradox of this, and most people measuring from that system. Well, they're making the system stronger by trying to save their money in that, and as they do that, government has no choice because you have this elite class that has more and
Mm-hmm.
more housing, more and more real estate. So government has no choice. The same thing that created that elite class from those people trying to save their money better. And then if you understand that game and you can apply leverage, you buy more
Yeah.
houses. Then you have a rental class that can't afford them, that votes for government to take that back.
Mm-hmm.
And so when you just saw Biden's release in increasing capital gains taxes that came out yesterday, whether it goes through or not, you can guarantee from that system that housing will be
Mm-hmm.
attacked, and they'll tax it an entirely different structure in the future because it has to be taken back, and it has to be taken back by either by taxes, because the inflation driving it is making those prices go
Yep.
higher. And remember, they're not going higher in real
Mm-hmm.
terms. So it's an illusion, but people think they're getting richer, and then the governments that created that are also going to tax it back. So you're getting killed on both sides. And if that doesn't happen, then citizens will rise up through force and take that back through force. And you can start to see this in housing as an asset class, where there's where almost the law no longer matters. People are camping out in
Mm-hmm.
those houses, and you can't evict them. And so you're seeing all of the signs of this getting worse and worse and worse, and people are still believing that they're safe, their money is safe in housing, and they can't move that housing. It becomes very unsafe at the end
Mm-hmm.
of these financial experiments that we're in, and that's where we are.
The switch in housing from a utility, a place to live, to a store of value. I have an example of that. So I'm in San Diego. I have a little office in Coronado. Have you ever been to Coronado?
Yep, I have.
So,
Yep,
the Hotel Del and its beautiful beach, it's island
yep,
like right across.
it's
It's
beautiful.
amazing.
Yep,
So that's where I'm recording right now. But I have a friend who works for the city, and he says about 30 to 40% of the houses are second homes, are virtually
yep,
empty. So a third
yep,
of the island has turned into a store of value asset. Because I mean, for people who don't know where this
yep,
is, it's an island basically in San Diego Harbor with a beautiful beach and San Diego's weather. It's like Pleasantville. Everyone would want to live here, and
hmm,
it's so it's so sad that essentially a third of the homes aren't even used in a really desirable place to live because of what's happened. That's such a real world view of the issue of using housing as a store of value.
Yeah, and so it's a part of the financial system that gives the financial system the leverage to be able to continue,
Mm,
and that's why it's constantly bailed out, or the banks are bailed out when they make bad loans against it, because they have to be, otherwise the whole financial system collapses. And if you knew that on the banking side, if you knew that on a hedge fund side, if you knew that you were going to get bailed out
hmm.
for sure, then you would leverage
Yeah.
more bets. So it's not capitalism at all. It's crony capitalism disguised as
Hmm.
capitalism, because you know you have to get bailed out because you're a counterparty risk to the entire system. So heads you win, tails you win. While everybody else loses. Even those winners within that system, though, if you play the game long enough, they're losers. That's kind of what I'm getting at. All of those people that think they're winning, and that's what's happening in Bitcoin. Bitcoin is repricing housing. And it doesn't care about housing. It's just an honest ledger. So my house, I say this on many podcasts. My house in fiat pieces of paper in Canada went from 1.4 million to 2.1 million in the last 4
Hmm.
years. But measured in Bitcoin, just an honest ledger that can't be changed, it went from 300 Bitcoin to 22 Bitcoin in the same 4 years. In 4 years from now, it'll be worth 2 Bitcoin, maybe
Mm.
even less. And so if you measure in something that is a better store of value, it's repricing. Remember, your house value is just the best way I think to look at this for people just getting into this is go look at Bitcoin price, go and then magnify it to the max in your country. And then so in Canada today, Bitcoin price is I call it 90,000 pieces of paper.
Hmm.
But it's important to say pieces
Yep.
of paper, right? And why is it important? Is because it breaks the lock people have with their unit bias. And then go look at Bitcoin price in Turkey, where it's 2 million pieces of paper,
Yep.
or Lebanon, where it might be 5 million pieces of paper, or Egypt, similar, or Venezuela, where it's 55 million pieces of paper. And then ask yourself, no, because then what you'll do is, no, my currency, it matters a lot, right? Um, and then ask yourself, are there people in Turkey that believe their pieces of paper are worth things? And you start to realize that the the you're living in a world that's debasing everywhere. It's just the rate of theft in currencies across every currency, and what rate of theft is in it, rather than is my currency real? It's just a piece of paper. And so if you can create more pieces of paper unilaterally, and people will price in those pieces of paper, then you can attract a lot of centralization by stealing the productivity that should flow to them, and they won't know. So that's what's happening all around the world. And most people are caught in that system, measuring from the system, and breaking your mind out of that. I know you've already broken your mind out of it, but is a real challenge for people, because they're so used to. In fact, every person that measures Bitcoin price in their piece of paper doesn't actually understand Bitcoin yet,
Hmm. Hmm.
right? They might be starting to understand it, but because what they're doing, if they think Bitcoin is going up, what they're actually doing is converting it to the piece of paper to price
Hmm.
things. And if you just say, what are all prices against Bitcoin, you'll see it just obeys the natural market. It obeys the free market, and prices relative to Bitcoin will fall forever.
Yeah, it's um, flipping the denominator essentially is what. Why do you work and why do you bring value to the world in your job or your business? Is it to accumulate more dollars or is it to accumulate more Bitcoin? And that's a
And
multi-year
that's
process, I think.
yeah, yeah. And either way you look at that, I don't actually think you do
Hmm.
either. Why you work and create more, try to create more wealth, is because um, you want to provide a good life to
Right.
your family. You want to do things with
Hmm.
that wealth. You um, you so so you've probably read my piece that I wrote, "Finding Signal in a
Hmm.
Noisy World," where all money is information,
Yep.
and and it's important information, but all it is information. We don't want
Mm,
more money. We don't actually want more
right.
Bitcoin. We don't want that. I know that's going to sound ludicrous for everybody wanting more Bitcoin, but we what we want is more of our time and more ability to use our money for things in the future that we
Yeah. Yeah.
desire. Whatever that is, and that could be some people kind of the information describing the feeling that they want. So some people's feeling on, I don't even want to use the money. I want to be known by future generations as the person who saved our generation, or
Hmm.
kind of so they want to be known, so that they want money for love and
Hmm.
belonging, to be known, to be known for that. But everybody's just on why they want the money. They don't want more pieces of paper. It's just information describing what they really want. They want to be able to use that for their means, in whatever means
Hmm.
that is, to be able to get the feeling that they want. Vacation, new car, um, generational wealth for your family, the feeling of that. That's why we want money.
Right. Yeah. And I mean, money is a medium of exchange and store of value. So if you say the purpose of money is you want to be able to exchange it for other things like time or a house or a
Yeah.
car or a vacation, or you want to be able to store your value, you want to preserve your time into the future to do something with it then, or to give you back more time then. So you don't want the money, you want the features of money. Um,
So let's use this, because I think on your housing comment, I think this is very misunderstood in the market, and so let's use it on housing. Um, and why people have such a hard time seeing this is they believe it's a light switch. Right, one moment we live in this world, the next moment we live
mhm,
in this world. So the world we live in right now, you could say housing is far overpriced relative to real
yeah.
income. Right, you can make
Mhm,
that statement pretty. And why is it overpriced? It's overpriced because we live in a debt-based system, and by leveraging debt, you can pay back the debt in cheaper terms tomorrow, and you can kind of have a hedge against that dollar collapse, in housing. So that's the why. And if you build that up, so that means relative to Bitcoin. Let's say you have 300
mhm,
Bitcoin, right? And you've held those Bitcoin for a long time. And you have a choice today of spending 22 Bitcoin to buy a beautiful, beautiful
mhm,
mansion, which at 300 Bitcoin you just might do, even if you knew that you could buy the same beautiful mansion, yeah, in 4 years for
yeah.
2 Bitcoin. But you might do because you have 300 Bitcoin. So as you do that, make your choice. Then, because you ascribe, I want this for my
Mhm,
family, you're distributing your Bitcoin. So you had a
yeah.
lot, you make a choice, and you distribute your Bitcoin to other people. And as you're doing this, Bitcoin gets distributed for further and further as more and more people. You might say, you know what, I'm happy with rental, for like, my life's great, don't need it, because I'm not now thinking a store of value anymore in housing. I'm thinking of a
Mhm,
utility. When do I get and when am I going to trade my Bitcoin for that utility? When does it make sense? Because if I know this is going to happen, then I might just continue to sit on that 300 Bitcoin, use it for other things. But every one of those things you're choosing, right? You're choosing when it's right for you.
mhm,
And that free market change of this repricing every house, all of Google's cash flows,
mhm,
everything is just a free market choice of when it's right for any one of those people to make that shift. But I keep saying, if Bitcoin stays decentralized and secure, and we could go into why it will if you want, but it will reprice everything, every asset on this planet over a time horizon. The only choice is, if you're holding Bitcoin, when do you want the asset versus Bitcoin? When do you want something else? And people will make Bitcoin might go to $1 million, and a whole bunch of early Bitcoiners will use their
Mm-hmm.
newfound wealth to buy housing. And that means housing might not fall as fast, right? Because there will be that demand, but fall that fast relative to the new currency, but that's going to continue and continue to happen. And then in the next cycle, then it'll fall. Bitcoin will be volatile on the way there. It'll fall, and in the next cycle, it might be $4 million, and then it'll drive more people to say, "Oh, I'm going to buy the house." But housing measured against Bitcoin is falling to its utility value. Period.
So you say, like, what gives you such confidence that that is where it's going? So you say it will, all houses or everything will be repriced in Bitcoin. How have you gotten there?
Be, because it's so when I talk about it now, I talk about it as a permissionless, open, decentralized, and secure protocol bounded by energy, creating energy abundance by its very nature. So bounded
Mm-hmm.
by energy and creating energy abundance through a free market kind of search for lower cost energy, stranded energy, makes and the nodes that protect it after the mining, it's us, we protect it, right, from bad actors. Our nodes confirm that. Bounded by energy, all life is bounded by energy. So if you live in a system that is not bounded by energy, it's bounded by a whim of somebody being able to create more pieces of paper, and those pieces, and you're using those pieces of paper to price things, and you have this new thing over here bounded by energy that doesn't care about your pieces of paper, as long as it stays decentralized and secure, it reprices all of your pieces of paper. It reprices everything. And so why does it stay decentralized and secure? Is because we already know that. There's too many people that already know, and our nodes confirming all the network. Like, you know how this works. As you know how it works, you tell other people. And as they start to understand the depth of this protocol and what that means, they add their voices and their contribution and their entrepreneurial skills to it, and all of the potential attack vectors to try to centralize it and co-opt it are nullified by all the participants almost fighting back and
Mm-hmm.
forth to find more attack vectors. And so you have this free market force that already knows that the truth. And if there's too many people that already know what that looks like, they will never go back. And there's more and more people who know this every day. So it's not, and if you, once you understand that it's not the miners that
Mm-hmm.
control this, they're just market actors trying to win the best
Mm-hmm.
energy cost and create businesses. It's the nodes that confirm all the transactions. And where are the nodes? Individual people all around the world. Those individual people would have to disregard their own best interests and the interests of
Yeah.
everybody else to be able to change this. And so you realize it's almost impossible, with how many people have this insight today on how important decentralization and security is for our world. And you join your voice to the honest network, and the honest network gets stronger by more honest people joining their voice to the honest network, and it just keeps on. That's why it's more decentralized and secure
Mm-hmm.
today. That's why every year you kind of see this. I'm not saying, you could say, okay, what about
Mm-hmm.
mining pools? You could say about what about that big miner? You could say, what about all these? I'm not discounting these attack
Mm-hmm.
vectors. What I'm saying is there's tons of different free market solutions that are already making those attack vectors go away, because they're also known by all of the participants in this
Mm-hmm.
network. They're watching we're there. I see this. I see so much innovation on this side to make sure this stays decentralized and secure. If you think about some of the stuff Jack Dorsey's doing, some of the stuff he's doing in not even funding against his own company interests through open source software, to be able to make sure this stays
Hmm.
like this. If you look at some of the stuff Odell's doing, and if you look at some of the stuff that I could mention
Hmm.
thousands of names. If you look at some of the stuff we're doing at EgoDef, and if you Alex Gladstein, I could sit here all day and mention thousands of names, and those people, all of them and more, are defending this network, and there's more added to it literally every day, um, keeping the honest network. So to stop this from happening, you would have to stop all of those people and more, and you couldn't even find them. I'm not even talking about the people that aren't even known
Right.
to us.
Right. The the thing that's probably confusing, because the first time I heard decentralization in regard to money or Bitcoin or cryptocurrencies, you just kind of say, oh, okay, yeah, that sounds good. But you don't actually, it takes a while to think about what actually that entails, getting things decentralized. And the reason I bring that up is because if people are slowly switching over to this decentralized ledger or system, a lot of people are going through other cryptocurrencies or shitcoins. So for example,
Yeah,
Solana, like 2 months ago, turned off their network. And I don't know anything about Solana. I
yeah,
just, whenever this happens with one of these cryptocurrencies, it says, oh, their system's off right now. Somebody turn the switch off. And then I go to the Solana
yeah,
website and it always says right on the homepage, decentralized. And so all these other
yeah.
ones say that as well. So how,
So yeah, that's the problem. It's so if you could, so how would you co-opt Bitcoin, or how would you create wealth yourself if you were a bad actor? And actually, you know what? I don't want to say bad actor, or you didn't understand this protocol deep enough. Um, what you because of blockchain trilemma, and you've heard me say this countless times, decentralized insecurity, you can only solve two of three parts of a triangle. Ironically, I used the exact same thing that Vitalik used to try to sell Ethereum as a way to show everybody why nothing else would work. Right? I use the exact same thing, and I did that for a reason. Right? I did that for a reason because he created, through the blockchain trilemma, a a void that said Bitcoin couldn't scale,
mm-hmm,
because of the trade offs, right? And you had to have a scaling solution, but he failed to mention that you could only have that scaling solution if it was either it was lack of
mm-hmm,
security or centralized. So even in this thing, to be able to talk about the world computer, missing from that whole thing was, um, it's going to be centralized,
mm-hmm.
right? There's going to be new rulers of the system, even if it could work. And I understand it. I understand that if you were one of the Bitcoin actors early on, Roger Ver or anybody else talking about Bitcoin, but it wouldn't change because of the same thing we're talking about. People would not change it. They couldn't co-opt it. The the whole 2017 block size
Mm-hmm.
wars, they couldn't be co-opted. But you thought you could co-opt it. You would change
Mm-hmm.
the rules and create a new blockchain or crypto. And then once you've changed the rules to that, you would have people think, instead of a protocol, you'd have them think of technology. Because if you could get everybody to think it's all blockchains are similar, and mine is a better blockchain, mine's a better technology rather than a protocol, then you could fool a whole bunch of
Mm-hmm.
people. So so when I hear blockchain or crypto right now, I just know somebody's just not close to
Yeah.
deep enough on the underlying protocol and what this means. They're not close. Now that doesn't mean they won't get there, but anytime somebody says, I'd had this joke to a good friend of mine in YPO recently, and I went in and gave a talk to his chapter, and he said to me, or to his forum, and in the back channel before it, he said, I said, "What's the knowledge base of your forum?" And he said, he said probably not really high. Most of them don't understand crypto. And I said, because I said, that's what's the knowledge base from 0 to
Mm-hmm.
10. And I said, well, I said, well, you're a 1 because you just said
Right.
crypto. So if people are behind
Oh,
you,
right. Totally.
so, but it just shows how
Mm-hmm.
early we are, because it's really fundamentally misunderstood. But you could create a lot of money by hyping up something else that people don't understand.
Yeah, which is obviously what we see. I have friends that are into Bitcoin, hold Bitcoin, haven't sold it, but then they also like the next step beyond saying crypto, you know, is thinking you can trade other cryptos to get more Bitcoin. That's like this
Totally.
you're like going up the
I,
ladder.
I, I talked to one of the top
Yeah.
traders, and he called. It was introduced kind of through Twitter and through somebody else I knew, and I talked about the same thesis. And after an hour conversation, he went, "If I just held, if I only just held, I've lost so much
Mm-hmm.
money by trading this all this other stuff against Bitcoin because I thought I could outsmart it."
Yeah.
um, and 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 that's what happens. And then eventually people realize, and sometimes you have to bang your head against the wall a lot of times before you realize. But eventually people realize there is, like as Sailor would say, there is no second best.
Mm-hmm.
There is nothing
Yeah.
else in this ecosystem, nothing else that won't, all of the other stuff will fail.
How do you think that actually ends up getting cleared out? Because you're having hundreds of new coins printed probably daily. There's like whatever 20,000 other cryptocurrencies besides Bitcoin. Um, how does
Yeah,
it? How do those one by one get cleared out if those are expanding so quickly?
through a lot of people losing a lot of money. So right now you're seeing between runes and a lot of people losing a lot of money there, or ordinals,
Mm-hmm.
or L2s saying that Lightning can't scale and raising tons of money with a token that on some kludgy mess that they think can 2 years from now, which can't. Um, the and through a lot of people losing a ton of money, unfortunately. That's when like Bitcoin maximalism, when if you really understand it, that kind of where that comes from, they're trying to save people from losing money in all these scams.
Mm. Yeah.
That's ultimately what it is. And so when you see those scams over and over and over again, um, then you start to you start to see them, like, and how many people talk about their new token and how much money they can make, and how perverse the incentives are in the VC land by by taking these tokens and selling them to getting their liquidity on the back of their exit liquidity on the back of tons of people coming in and these coins going to zero. You see it over and over and over again, and the incentives are completely misaligned. But then you ask yourself, and you've heard me say this many times, if you live in a system and you're measuring from that system that is based on
Mm-hmm.
theft, because that's all inflation is, right? And it's granting somebody else to print more money that comes from
Mm-hmm.
you, so the prices don't fall. It's just
Yeah.
theft. If you live on top of that system, and regulation is on top of that system, regulation to protect your money from a system that steals it, and laws are on top of that system. And as that system gets worse and worse, you can expect all of the next things from that system to get worse and worse. And you could expect a whole bunch of people to be completely confused and taken advantage of from that
Mm-hmm.
system. When you really understand Bitcoin and you're pricing from a new system that has none of that, it's tried. Like people try to conflate it so they can try to take it.
Yeah.
FTX tries to get you to hold, they'll hold
Mm-hmm.
your Bitcoin so that they can game it. BlockFi, all of these things, they're all centralized systems to be able to try to get you to part with your Bitcoin. So you see this everywhere, which would naturally look like that, and people will try to play fiat games against a against an asset is nothing in the world has ever looked like it before. So it's normal. Fear, greed, um, mistakes in the market. It's just totally normal if you lived on top of a system of theft that had to get worse. That's what people would be looking through, and they'd be looking through this instead of a protocol. They would be looking at, oh, this technology, and how do I make more money because my money's losing value. So how do I? You would get this degen gambling culture that would prey upon it. Would get worse and worse from that system, because look at it around the world where money systems are completely broken, and look what happens, right? Of course, right? That'll happen. So from that, unfortunately, just a simple answer for you is it's going to get a lot worse, and people are going to lose a lot of money. You don't have to. You could understand Bitcoin, hold it in self custody, and not worry about it. But most people won't.
Let's go back then to housing and sort of your thesis there that everything will be repriced in Bitcoin in a sort of transition process. And let's think about housing as an example. So if you go to buy a house now and the house is $1 million and you put 200,000 down and the bank prints 800,000 and gives it to you, and then you pay it back over 30 years, right? So that's how houses are bought now. How would people buy houses on a Bitcoin standard?
Well, I used the example before on my house being 22 Bitcoin now, and you let's imagine you have 300 Bitcoin, right? And imagine, so now let's just fast forward. Imagine you don't have 300 Bitcoin, but you have 2 Bitcoin today. Because you're buying right now instead of a house that so in Canada, let's say each Bitcoin is 90,000. It's $180,000 for 2 Bitcoin. And you buy, instead of putting $180,000 down on a house for $2 million and then having a $1.8 million mortgage that you have to pay, that you end up paying, call it $8,000 and more than that, $10,000 a month for 25 years to pay back that mortgage. Instead of putting that $180,000 down safely on the house, and then remember property purchase tax, all the taxes on top, all the maintenance fees and everything else, you just decide to hold it and rent for a while. And instead of paying $10,000 a month in mortgage to the bank, you're paying, let's call it, for the same house, you could rent it for $4,000 a month. So you're saving $6,000 a month, plus you still have your 180,000. You put that into Bitcoin. Now you have 2 Bitcoin. 4 years from now, that instead of having a $180,000 or $1.8 million mortgage, you can buy the house with no mortgage, zero. You buy with
your Bitcoin for the house.
You have no debt, right? The 4 years probably after that, if you want to not buy the house, you probably buy the house for half a Bitcoin, and you have 1.5 Bitcoin. So over time, through that course, houses are falling all the time relative to Bitcoin, and your ability to actually move to finance it with debt, right, or finance it with your Bitcoin, improves and improves and improves. So the debt falls. So why people are so confused on this is they're measuring right now and they're saying houses will always be this price in Bitcoin. And so that means where do I mortgage? How big is the debt I have to pay? It won't look like that. The debt is collapsing. The debt is going to be wiped out in Bitcoin terms too. Somebody's going to pay for that. People are going to lose their money over and over and over, but the debt will be a much smaller portion of the overall market relative to Bitcoin. Much smaller portion.
So if we go forward even further and assume the world is on a Bitcoin standard, and whether that means it's what people buy a coffee with, it's really like it's people's unit of account and it's people's preferred store of value. If we're on a Bitcoin
Yeah.
standard like that, do you think people will be borrowing Bitcoin from banks or from other people's to buy a house, or will the house be back down lower to the income level? It's if it's 10x the income level now. I mean, how does that all work way forward in the future?
So yeah, so a lot of people. So way forward, you you're in a free market. You're giving value on Bitcoin, and if you are valuable to somebody else, then the exchange is you collect more Bitcoin. Um,
Mm-hmm.
all the while, prices are falling to the marginal cost of production. So house turns back into a
Mm-hmm.
utility. And so that, say, in a utility value, it loses a monetary premium. And now every year the house gets cheaper because now robots and AI are building your house,
Right.
right? And materials going into them, because energy price relative to Bitcoin is falling all the time too. And that means transportation costs. That means all the materials are falling forever, for housing. And so that house falls in value over and over and over and over again as a utility. I know this is so hard to even comprehend right now from the world we live in, but that's what and ends up happening. Certain regions, you could say, it's more scarce housing, more but all things
Mm-hmm.
being equal, houses will fall in value because it'll be more like a utility. Um, and and that means you you need to earn less Bitcoin to be able to buy the house over and over and over forever. And as more and more people operate in that, it just keeps on getting better and better and better. Literally abundance. Um, so I know that'll break people's brains because they're so used to, they saw their parents
Yeah.
and their grandparents have a
Yes.
$2,500 house or a $14,000 house that now is worth $2 million, and they think, "Wow, how rich they got," and that was the way to. And so this breaks that paradigm completely. And so we're so used to that paradigm that what I'm talking about is so hard to see. But even what I'm getting at is Bitcoin doesn't care that I'm talking about this. It's repricing this anyways.
Yeah.
Every 10 minutes, you have a new block. And so it's repricing this whether you see it or not. You can measure your pieces of paper for as long as you want. You can convert your Bitcoin into your pieces of paper to price the world. But that's actually not what's happening. And it's not what's just take any product over the last 10 years or any company like a Google and price it in Bitcoin.
Mm-hmm.
And you can see everything I'm saying is verifiably
Mm-hmm.
true. It's happening. So all those cash flows, all of those companies, all of those things are being repriced. Um, so and that'll just continue. So it's just when, and oh, by the way, and this is probably really important because I didn't say it specifically. Loans in
Mm-hmm.
Bitcoin. So a ton of people will lose a ton of money by leveraging their
Mm-hmm.
Bitcoin into that. That game will be played over and over again, and people lose their money because they're so used to an inflationary world where the loan gets cheaper over time with their ability to pay
Mm-hmm.
back. But Bitcoin imposes a free market discipline where prices follow the marginal cost of production, and it imposes a deflationary world. That means the loan gets more expensive. So if you take too much of a loan in Bitcoin terms, somebody is going to get wiped out by that equation. And so if you send your loan, if you send your Bitcoin to a centralized exchange that then gets liquidated on that, you've lost your Bitcoin.
Yeah. You bring up the example and you nailed it with the housing. You know, my parents bought their house for 78,000 in like the mid 80s, and it's probably worth 1.1 million now. But I actually charted
Yeah,
it out once, and it's underperforming M2. So
yeah,
that's up like
yeah.
12x, and M2 is up 14x. So they actually, the house is a smaller slice of the monetary pie than it was at the beginning, which is just almost
Exactly.
incomprehensible. So it makes me wonder if And then that's forget about all the maintenance costs of the house along the way, right? New roofs and
and taxes.
taxes. Yeah.
Yeah, and taxes, and then estate taxes, and forget all of that, right? It hasn't even performed against
No,
M2. So
with
it's
all,
just
yeah.
all it's done is protected your money from losing money as fast as it otherwise would have in the
Hmm.
bank. That's all it's
Yeah.
done, and you have all the taxes and liabilities to be able to do that.
Yeah. So do you think then, probably last sort of question maybe is like, do you think, it's clear if everything gets repriced in Bitcoin, houses will not be a good store of value going forward. Do you think they were actually even a good store of value in the past, or is that just sort of like a perception of the system?
Well, I think because of the taxes, so very wealthy people in
Hmm.
housing do this to get around the taxes. They buy the house, they appreciates, they keep they take out tax free money as loans. As the price goes
Hmm.
up, they leverage the house higher and higher and higher, and they take out tax free money in loans. It's a But you'll be able to do the same thing in Bitcoin
Hmm.
and never sell the asset if you wanted to. So so in the past, it was one of the best ways to hold value. Um,
Yeah.
and because there
Hmm.
wasn't Bitcoin, so it would be really difficult for most people to where can I S&P was another area that was reasonable at holding value against the debasement, but they're not they're and that's why it consolidates further and further, and it consolidates in the top 7 tech companies that are literally removing labor faster while you're making them stronger with your investment because you think you're winning while they're consolidating more power against you. And that's actually why this is so like we use things that give us more value. So if Google tomorrow charged you $5 a click, you wouldn't use it
Hmm.
anymore. You'd use
Hmm.
something else. And so you, but then you hold your investment in Google because if you don't, um, it loses value faster. So you make the thing
Yeah.
stronger that is consolidating all of the information
Wow.
against you. And then you wonder why the world looks
Yeah.
like that. And that's why it's so important. Bitcoin doesn't care about
Hmm.
Google either. It's repricing Google, it's repricing Google's cash flows. And Google has a choice at some point to put Bitcoin on their balance sheet or not, or and Apple does too, and all of these companies do. Um, and if they don't, MicroStrategy will buy them.
Hmm. Yeah.
Right, but really, that's what will happen eventually.
I mean, they're the only stock that has protected themselves against the risk of everything being repriced in Bitcoin. The only one in the world, right?
Yeah. So there's lots of private companies
Hmm.
that are doing this. I know
Yep.
very many family offices, private companies that are doing the same. That have been doing the same strategy. Actually, some
Hmm.
longer than Saylor. But as a public company, being able to access the debt markets like he has, he's putting on a
Yeah.
clinic.
So as we wrap up, I mean, there's always tons going on. Is there anything you'd want to discuss that you think we missed, or would you like to explain what's going on at Ego Death, or anything you think would be
Yeah,
valuable?
I would just say that a lot what I hear a lot of you saw
Samurai Wallet?
the
Hmm.
samurai wallet, yeah, samurai wallet, um, where privacy is under threat right now, and it's under threat because what you can easily target is you can say bad people are using it, and then you can
Yeah.
um, but it didn't talk about all the good people using
Hmm.
it. It didn't talk about so if Samurai and Walker put up a really great post on this. If the exchange is a money launderer and those people are going to jail, then why aren't all the executives at J.P. Morgan
Right.
going to jail because of Epstein
Hmm.
using their
Yeah.
service? And so you start to see the hypocrisy in the existing system trying to protect you from the system that's stealing from you, and that has to get worse. So, and there's a whole bunch of Bitcoiners that are kind of feeding that beast and everything, and it will get worse. But the technology that's building, that is completely private, that's able to build on this and unstoppable, is also
Mm-hmm.
building. So this was going to play out for a long time. Um, we're probably in the then they fight you stages. We've probably been there for quite some time, and I can see a whole bunch of the next steps playing out. But it doesn't concern me one iota about the resilience of Bitcoin and what's coming, because I get to see what's being built long before it's out there. And so I'm really like, I'm just I'm wildly excited about what's coming.
Well, Jeff, I think people should read your book, so I'm going to link to that. Finding Signal in a Noisy World. I'll link to Ego Death. Anywhere else you want people to go check out?
No,
Okay.
that's great. Yeah, that's maybe link to my
Yep.
website,
Sure.
jeffbooth.ca. And the only reason I say that is I think too many scammers out there trying to
Yeah.
impersonate me. So if you don't see a social media account tied on
Mm-hmm.
to that site, then it's not
Mm-hmm.
me. I spend more time on Nostr these days than far more
Yeah.
than Twitter. So follow me there
Great. Thanks so much for taking the time, Jeff.
anytime. Great talking.